Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, November 7th, 2011 is sponsored by Realtik. Alright guys, let's get right into the mix here. Market's pretty wild day today. We had a nice little push up on the first 20 minutes of the trading day. You're currently looking at the SPY, which is the ETF that tracks the S&P 500. You can see initially the upward move on this 10-minute chart took us upwards of the 126 and a quarter-ish level right up here before a sharp reversal came in, sending us mostly lower. Now, interestingly enough, a couple little notes here. We did have a little bit of a head and shoulders pattern that began to play out to the downside. As of now, though, that has failed on the back of some rumors coming out of Europe that are sending the market into the positive territory side. All right, so again, you can see here you had a little bit of a head and shoulder. Let me just draw it in for you guys so we can really be aware of all the patterns. The pattern was right here. Here's your shoulder, here's your head, and here's your other shoulder. The breakdown of this neckline right here was where it triggered. You can see you did get a nice little bout of downside right here, coming right down towards Friday's lows, and then the market again on some positive rumors and light volume all of a sudden taking off to the upside, and we're basically back to the flat line on the markets. Dow Jones Industrial Average is trading currently up about 7 points, NASDAQ is down 7, and the S&P 500 is down about 30 cents. So it's a very, very flat day. Volume is light, 140 million traded on the SPY, but it has been a volatile. We've seen some good volatility because the market's like on a yo-yo. Imagine a yo-yo or a pendulum type swing where, we're swinging this way and you hear negatives out about Berlusconi and he might resign and then he's not going to resign. Same thing with Papandreou in Greece. He's going to resign, now he's not going to resign, now he's going to resign again. And it's keeping the market on this kind of this string where it can be yanked. It's almost like a fishing line, and the market's a fish attached to that fishing line, and you're pulling it in and you're pulling it in and you're reeling it in, and the market's jerking one way, the fish is going that way, and you're pulling the other way. In any case, bottom line is the markets continue to be very, very whippy on this Monday on light volume, and again, we are hovering around the flat line. Now, there are some big movers today which I do want to discuss. First off, let's take a look at what oil is doing. The USO is up 30 cents. Oil spot crude is up about $1. Oil is back above $95 per barrel. And if we look at the chart here, you can clearly see that we're slowly creeping up towards that 200 moving average. I do believe that oil, the USO, will get to that 200 moving average within the next 2 to 3 days. So probably by Wednesday or Thursday, you do see the 200 tagged on the daily USO chart. That will be resistance at that point. But bottom line is, what's going on here? Why has oil been up so much of late, continuing up with the market chopping around? Even the market had a pullback early last week, but you didn't really see oil pull back that much. And the reason is, even over the weekend, we got more news from Israel. Israel saying, an attack on Iran is coming closer and closer, and there's that kind of uncertainty in the Middle East now back in play. You have that premium built into oil, which is keeping oil up. Now, again, eventually oil will come back down, but in the short run, it's probably close enough to that 200 moving average where it's going to work like a magnet and just draw it right up there to that 200 moving average. All right. Other big moves today, you have the GLD, gold. Gold is having a very substantial move up. You are, in fact, into a gap fill area. See this candle right here, this red candle? That's a big gap on this move down. See, you had this big move down right there. The gap fill has now been essentially completed. You can see that this is the upper range of the bar and the lower range of the bar, and you're inside that area. I do believe that is now resistance on the GLD, and it wouldn't be shocking to me to see a pullback in gold in the near term. So again, this is my short-term target. I kept on telling my members in the research center to be patient for this to hit, and sure enough, it has hit now, and we've achieved essentially the upside target. All right, now again, just a reminder for all of you that are watching this video, there's a 7-day free trial to the Research Center and the Intraday Stock Chat at InTheMoneyStocks.com. That's InTheMoneyStocks.com. And ultimately, you join the Research Center, you're going to get videos every night, you're going to get swing trade live alerts, you're going to get key chart setups, trades, you name it. Everything is going to be live given out. We send out alerts when you put in or when we issue an alert on a trade that we're taking. If I take a swing trade, I post it live inside the Research Center. All right, you get the hidden gems. Our last hidden gem, Pacific Ethanol, it was given at 29 cents. It went to about 75 cents in less than a month. 140+%, 150% gain in less than a month. And that's just one part of the Research Center. When you take the 7-day free trial or you're a Research Center member, you get everything listed under the Research Center. When you take the stock chat, intraday stock chat, you get live charts from our computers as we're trading the market. You get live calls, live analysis. You ask questions live. It's all included there. There's a 7-day free trial, no obligation. I suggest taking it, seeing what it's all about. It's worth $1 billion in my opinion. You can have it for free right now with the 7-day free trial. All right, so let's go over a couple of the charts. How's SLV doing? SLV is up as well. The SLV is coming into a little resistance at the 50 moving average. I still think it's probably going to go up to the 200 moving average. You have right here this little pivot top right here, which is just above the 200, which is more resistance as well. So you do have a lot of resistance levels coming up on the SLV, which is the silver ETF here on the daily chart. So we'll watch that very closely and see how it all plays out. All right. What else am I watching today? I'm watching some small caps. I'll give you one right now. One of my favorite small caps, DPTR. All right, DPTR, Delta Pete Petroleum here. This is a oil stock small cap. Look at the fall it's had. Beautiful little in spirit of bullish base. I do believe they report earnings tomorrow morning, so you got to be a little careful in that respect. I don't know what it'll do on that. But ultimately, with oil at 95 bucks, this is a no-brainer. No-brainer in my opinion. All right, it's got to get a little bit of a bid. You have other oil stocks, small cap oil stocks, continuing to make moves. You can see this one's come off the lows, and we can take a look at BDCO, Blue Dolphin Energy. Look at this move up on Blue Dolphin. Nice consolidation there. And we could go on and on to other small cap oil plays. They've all had nice moves up. I think if you go towards $100 per barrel, that DPTR has a good chance at a 25% gain minimally from this level here at around 225, 228, 230 area. All right, again, you just got to get over the hump of earnings tomorrow. I have no idea what that's going to bring. You may want to wait to act on it until after earnings is the safer play. But I do believe that's going to be a big one, assuming it can get through the earnings announcement tomorrow morning. All right, let's go over a couple other charts. What else is moving? How's Apple doing? Apple is still negative on the day. Apple's been under pressure all day, though it has come well off the lows. Here's the intraday chart. All right, so the intraday chart on Apple right now, and we'll continue to watch that very closely. You can see it's come back off those lows, now hitting resistance at these moving averages. Look at how many tails are right into that area since it's such a key resistance level. But I think the more important thing on Apple is the daily chart. The daily chart is very, very bearish. You had a big drop here off a beautiful double top. There's your double top, right? All right, we all know double tops are resistance. So here was your hit. You went up, hit it, double top. It fell sharply into the 20. Got a sideways bear flag in spirit of. That's bearish. Falls again. Another in spirit of bear flag. If it breaks the 50, this thing goes here. I'm telling you right now, if it breaks this 50 on a closing basis, meaning on the daily chart you close below that, that should go all the way down to the 200 moving average. All right, so keep an eye on Apple. That's a great chart setup. All right, I think there's a couple other good chart setups as well, but let's take a look at some of the financials. Financials are hanging in there today, down about 25 cents on Goldman. Goldman's an interesting chart here because you have a bearish consolidation pattern right here, but you're holding a bullish level right here. So it's a negative and a positive, and they cancel each other out, which means on this specific chart, you do not act. And one of the hardest things to do sometimes is not act on a chart. But if the analysis, if the in-the-money stocks methodology tells you not to act and you don't act, you want to always put yourself in a position to make money on every trade. When you evaluate that trade, is it telling you there's an 80 to 90% success rate to that trade? And again, we've had some of those that I've shown you earlier today in the video, just today. But this one, for instance, is a good example of one that's not, because you have a bearish chart set up with two bullish support levels of moving averages. Unless it breaks one way or the other, you have no good indicator. Let's take a look at JP Morgan next. JPM. All right, JP Morgan, same thing. All right, and this is probably a good example because if you think about it, look at what's going on in Europe. You have the neutrality of these two charts, Goldman and JP Morgan. Why would these charts be ones you would stay away from? And the charts are telling you just that. Because look at what's going on in Europe. It's all based on how much exposure. I mean, we talked about MF Global. MF Global got crushed because they had too much exposure. They went out of business like that. Corzine's in a lot of hot water over that, which was the former governor of New Jersey. And we all know about that situation unless we've had our heads in the sand. But ultimately, it makes sense that these would be neutral plays because, and the market charts are telling us that, because you could go one way. Maybe the bailouts in Greece happen. Maybe in Europe they happen. Or maybe they don't. Well, that's a maybe this, maybe that. You're not going to get good enough odds right now to make that trade. And the charts are telling you that. So by reading the charts, using the methodology here in the Money Stocks, you will become discerning enough to pick out the winning trades and the losing trades. All right, or like equal or neutral trades. You want to pick the winners, let the losers or the ones that the odds are not good enough. 80-90% is good enough. Anything less to me is not. You stay away from those trades. All right, guys, I hope you have a good basis for what I'm talking about. Spiders, again, have now gone positive. Nice little push. Next spot of resistance is going to be right here. In fact, I'll probably short this if we get up to the 125.88 for a scalp short on that push. It's also very near double top as well. I love this area right up here. Right up at this pinkish slanted line, I think that's right around 195, 125.95, 90 area actually would be a better area right there. All right. Take a look also, keep an eye on solar stocks. Some of the Chinese solar stocks I am starting to watch on the small cap side. This one's one of them. I talked about this to my members, guys, and just giving you guys a heads up. I love this base it's forming. Any sort of close above the 20 should set this off to the 50 based on momentum right now on CSIQ. This is CSIQ Canadian Solar. Look at that chart. And again, the key is as long as it doesn't close below this blue line, which is at around 305, it's golden. If it closes below that, then you don't want to like it. You don't like it anymore. All right. Take care, guys. Again, come take the 7-day free trial at InTheMoneyStocks.com. Join the pros. Step your game up. Become an institutional entity in terms of winning over and over again, banking money left and right in any market environment. I don't care if the market's going up or down. We'll find trades that angle for that and make money. Take care. And again, come join us here at In The Money Stocks 7-day free trial.